Hello, everyone. My name is Doug Rumer, and I'm an XM instructor. And today I would like to talk to you about a little known function in markets that so many new and aspiring traders overlook. And quite frankly, it's costly. And that is the accumulation and distribution cycle. And in order to be an effective trader of any length, you have to understand these types of cycles. So the theory behind this is money itself never really leaves the market. What we do as short-term traders makes up a very small percentage of markets, but most of the money that enters the market is done via banks, institutions, and hedge funds. And what they do is they buy things over a long period of time, also known as accumulation. And then at some point in the future, they will choose to sell or liquidate this position, and they will sell it over a longer period of time. Now, one of the reasons they do that is because their excessive size is so huge, there may not be enough liquidity in the asset. So they need to do that over a period of several weeks or several months. That's what we call accumulation cycle. And when they sell it, we call that a distribution cycle. Now, how you can tell that something is being accumulated or distributed. If it's being accumulated, you see these massive, large rallies followed by very shallow or small pullbacks, then another massive, large, impulsive rally, and that cycle continues. When it becomes distributed, it does the same thing, but it does it in reverse. You have these massive sell-offs followed by very small bounces or very small rallies, followed by more excessive sell-offs. And that's how you could tell if something is being accumulated or distributed. Now, why is this so important to you as a trader? Well, one of the things that really hinders the progress of a trader is the overbought or oversold theory. Many traders don't participate in something because they feel the price has escalated too much, and they say it's quote unquote overbought. Well, if the accumulation cycle is in full effect and the funds and institutions and the market movers are purchasing it, it in fact is going to go higher. Now, what typically happens in this case is a trader will sit around waiting for a very large pullback to engage in something they wish they would have bought. But by the time you get that very large pullback, that's an indication that this is now moving away from the accumulation cycle into the distribution phase, and it isn't worth buying. So it's important that you understand that not everything is overbought just because it went up a lot, and not everything is oversold because it's been sold quite a bit. It's all about the cycle itself. Now, also, one of the biggest questions that we get in our XM sessions every day is something that goes up a lot. Someone says, should I sell it? I have these profits. What do I do with these profits? Or maybe you're in a trade and you're not sure if it's working or not. And one way to have extra confidence is understand those cycles. It will answer those questions for you. So if you are buying something in an accumulation cycle, chances are you should hold it. If you're short selling or selling something in a distribution cycle, you should hold it. If you are long something and it enters a distribution phase, that's normally the key that it's time for you to exit the position or reduce your overall long exposure. So it helps answer one of the harder questions traders seem to deal with, and that's when should I exit a position? Also, being a trader, your main goal is to outperform markets. And the only way that you can do that is to be trading in the stuff that's actually moving. So you do want to trade the hot stocks, the hot assets, the hot things that are in the accumulation cycle, because that's where you're going to make the most amount of money. And the last tip I'll share with you today, it also helps you build a very sustainable business as a trader over the long term, because the theory is that whatever is hot in the accumulation cycle today will be cold in the future. So the stuff that you're looking today, that everybody is talking about on social media, that's getting all the attention, that seems to be going up every day, will soon come to an end. And all the stuff that you're seeing that's on the bottom that nobody's talking about and nobody's paying attention to soon will rise. And it always does that. So picture money constantly moving around a cycle and never leaving the market. This gives you the advantage and allows you to be a step ahead of everyone else. Now, if you'd like to learn more about the accumulation and distribution cycles, I encourage you to come and visit us here at xm.com. Every day the markets are open. We are trading live and we're participating live with both beginner room sessions and advanced room sessions. And I'd love to explain more about this process to you. So I hope I see you there.